So you know that old saying, when America sneezes, the world catches a cold. It's one of those timeless expressions that never seems to go out of style. Emerging markets like India often feel the ripple effects of any kind of turbulence in the American economy. Now, the US inflation data was released yesterday, and the world's largest economy is finally starting to catch a break. And the data has huge repercussions not just for the US, but for India as well. Now, the Nifty rose 1.89% today primarily on the easing of inflation and the pricing of the highly anticipated Fed event in the coming week. Now back to the story. US CPI inflation came in at 2.5% for the month of August as compared to July's 2.9% and was marginally below the estimate of 2.6% from the economists polled by Reuters. Now a point to highlight is that this data marks a significant step towards the Federal Reserve's target of 2% annual inflation. But when looked at the breakup, food and energy were the major reasons for the decline in the overall inflation. Now, the energy index decreased 4% over the past 12 months. Furthermore, easing in inflation can be attributed to the commodity and the vehicle prices, which declined by 1.9 and 1.2% respectively. But in contrast, core inflation, which excludes volatile elements from the calculation like food and energy prices, rose 3.2%, surprising everybody. Now, this metric remains well above the Fed's target, suggesting that underlying price pressures are still present within the US economy. Now, what does this data imply? Now, with the overall inflation falling to 2.5%, this data is the last major event before the highly anticipated FOMC meeting on 18 September 2024. Now, the Federal Reserve has been aggressively raising interest rates to combat inflation. Now, the image on the screen shows how the Fed aggressively raised interest rates and have maintained it at 5.5% since July 2023. Now, this has led to a higher cost of borrowing, which slowed US growth collectively. Now, with the inflation data cooling down to 2.5% and the FOMC meeting on September 18, Reuters expects the Fed to cut rates by 25 basis points and twice more in the year of 2024 itself. Furthermore, the market is increasingly pricing in the possibility of rate cuts in the coming months. While this could provide a boost to the economic activity, it also carries the risk of reigniting inflationary pressures. Now, to conclude, it is going to be interesting to wait and watch how the Fed acts with the inflation data. The Federal Reserve's decision in the upcoming FOMC meeting and the further meetings will be crucial in determining whether the economy can achieve a soft landing. Now, it is indeed a balancing act. If the Fed cuts rates too aggressively, it could undermine its credibility and make it more difficult to achieve its inflation target of 2%. Now, if you wish to know in detail about the US economy and how the Fed rate impacts the Indian markets, watch our Third Empire episode on this Sunday. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.